From Forex Trading Unlocked, your key to online trading. Today we're going to have a episode about the British pound US dollar currency cross and talk about what's going on in the Forex markets and how what we're looking to see happen over the next couple days in the British pound US dollar Forex market, as well as the futures market and options market. So before we go into that, just want to show you the disclaimer for Forex Trading Unlocked. It just lets you know that this analysis is for illustrative purposes and not for any type of recommendations for trading, and just for information and education. So with that, let's go to our scene here for the British pound US dollar. This is where it's at today. You can see that it came off a nice low and has rallied today and is trading right at the $1.2668 level. And right now, the way it's looking after this big slide, not to call a low, but right now we're looking for the market to continue higher for a nice bullish correction. So it's still in bearish mode. As you can see, it just made a recent lower move low. So that means it's still in a bear market. But that target range is where we're looking for some action to occur. So if you look at the lower end of that box, it's right there at the $1.2705 level. That's a good area to see. The bulls probably are going to be touching up into that range somewhere over the next day or two. Could happen tomorrow, could happen by Wednesday. The British pound has good volatility, and if you just look at the last few days, today's range as well as on the prior day's range, that we could easily touch that level within the next trading session. Now, after it hits there, it could go through there. Obviously, anything can happen. You probably see a little bit of resistance, a little touch and go action there. And then, if we can sustain a trade above that $1.2705 level, then I think you're going to probably get a good chance at seeing the market gravitate towards our first target level, number one, which is at $1.2772. Now, at that point right there, that is a very, very strong pivot on the weekly and monthly level. So at that point, if the market explodes, especially through the $1.2705 level, you would probably see, if it happens in a single day above that level, that it probably will run out of gas around the 127.72. At that point, we would be looking at a situation where the market will have made a newer move low, but then it will have made a higher move high. So that's the situation we're looking for to really trigger whether or not we have a chance to reach any higher levels. So that first level at $1.2705 keeps it within a lower move high area. So if it stays there and the market retreats, then you may see that low, that current low, be tested down at $1.2558. Now, a breach of that target level number one, confirming a higher move high, probably will accelerate a lot of your weak shorts, and it also would mean that it's probably no longer a profit-taking move. Like right now, the rally that's occurred off the low into today's session, and especially if it follows through up to the $1.2705 level, it could be mostly just from profit-taking from the slide that's been basically going on for the past month. We're also heading into the rollover expiration time period for the futures contracts for the June month. So you're going to have futures as well as options expiring over the next couple weeks. That kind of unloading of positions and spread trading can cause a lot of range potential trading, where we're going to see some extremes swinging towards the highs or the lows, testing the weak shorts and longs and giving them a lot of headaches, while the market really probably goes nowhere, especially if it falls back off of that $1.2705 area. But if it can get above the 127.72 area, at that point we're probably looking at a very accelerated bullish move that over the course of a few more sessions, this would take probably over the next week or upwards of 2 weeks to hit there, if it's grinding higher. But the the level at $1.2868 is definitely a target range also, and that would be the upper end of that box, and that would be your target level number two. So at that point, especially off of this current low, you most likely are going to see some digestive range trading. There's a lot of news that are impacting the British pound US dollar trade, Brexit obviously being the main thing. With the new leadership and heading into summertime and the G20 summit, we'll see what happens with that. Right now, currently, I think, like I said, you're seeing a digestive bullish correction, and especially like those key levels are ones to look at. First, look for the higher move high situation. which would be confirmed by the target level number 1 being hit for one, and especially with trading above that, you're going to most likely come back to where the 50% level is on this Fibonacci move, also from the current high to the current low over the past month. And at that point, that target level number 2 would most likely become very strong resistance, and at that point I would see probably a lot of pressure coming and a lot of fresh selling coming in before you would see any longer term trending back up higher towards, like, say, the 130 area or the 131 area, 132. Now, that wasn't that long ago that the market was up there. The British pound has seen a big slide. It's seen a 7-cent slide over the past, like, month. So that's quite a bit of volatility, and it's definitely a nice currency move. That's why people trade the currencies, is for the trends, and that definitely is the kind of trend you can capitalize on. From the chart, you can see here, especially, like, even though the market tried to pull back on every day, it was down almost every day for a month, and the ranges were pretty good, giving all kinds of selling opportunities. So I would say that now this market is in a bear market, so take that into account, especially with the recent past. So even if this market does get to gravitate up towards our potential target levels of 1 and 2, look at it as a bullish correction. The market is still in a bear market, and that would also be, like I said, this target level number 2. The market most likely will run out of gas there because it's already been a current low. As you can see, it's also a Fibonacci retracement level from the current high and low that's on the chart. And once it gets up to there, that could be still counted as a lower move high on the bigger scale. And then if the market starts to establish a range trade, then that's when we'll have to start to look for when the market has a chance of becoming a true bull, or if it was just, like I said in the beginning of this analysis, just a corrective move higher. So definitely look at it as a corrective move higher, although short term, on the daily basis, I think you have a very good chance of being a bull better than being a bear. Like I said, those first 2 key target levels are the ones to look out for. And once it gets to those things, I would not press your expectations. As remember, there's so much news that's coming out that this market any market can turn on a dime, but this one really has the likelihood of turning on a dime because of all the different news coming out between the EU and the UK. And right now also, this correction could also be stimulated basically because of dollar weakness. The dollar's been so strong that right now it makes sense to have a little bit of selling off in the dollar. So profit taking in the dollar, also profit taking, on the pound dollar correlation trade. That could be one of the reasons why this correction is actually beginning right now. So to look at it as a long-term low, I would use caution. The market could be right back down at that 125.58 level, testing new lows tomorrow. It could be back there tonight, who knows. But right now it looks like we have stamped a current low, and the target range in that little box is definitely what I think is the highest probable area for trading over the next few sessions going into the end of the week. Once again, check out those levels. The critical low trading under here is a very negative signal. So expect bearish momentum to build with the break below the 125.58 level. So that is a key risk level for your longs. Do not, I would say, under any circumstances, try and buy down on a dip below there. Most likely, any trading underneath there is going to start to compound weekly and monthly lows into much lower areas, like probably down to the $1.22 level, which is a whole other. Well, from here, that would be a whole 6-cent or 4-cent break, but once it takes out that low, obviously, it would be only a 2 or 3 cent break. But still, that is enough pressure to really grind out all the longs and keep this market in a bearish trend, which it has been, and you don't want to get caught definitely being long in this kind of an environment. So use definitely tight risk for your long trades, and use the $27.74 and $28.71 upside targets for definitely for your long trades to look for profit taking. If you're really bullish and you think that this market really is turning around and that's stamped a low, that's going to be a low for the next couple of months or a couple of weeks, what have you, then definitely use that $1.25.58 as a key risk level. And beyond for your first 2 targets, well then, like I said, I would definitely key off that $28.71 level if it gets up to there, because at that point the market's probably going to run out of gas. And that, like I said, there's a Fibonacci area there. It's also it's a pivot level there, as well as a couple other reasons for picking that number for a resistance target. So with that, I would like to just say good luck with your trading, and definitely be paying attention to the news. There's a lot of it, especially with the G20 meeting coming up. And just remember that for all you bulls out there, use caution, and for all you bears out there, I would definitely, if you haven't taken profit, now might be the time to take some money off the table and watch what happens with the market, because it's most likely going to retreat back to the upside for a little bit longer. And with that, if you like the analysis you've heard today, please like, follow, and share our link on Twitch TV. We definitely encourage the support and need it, so we can help build the channel up and build up the programming and format, and eventually get to a schedule that most of you people can rely on for when we can release these different analysis updates for you. And if you like what you've heard, check us out at www.forex-trading-unlock.com, or you can check out a book I've written on Amazon, High Probable Japanese Candlestick Patterns, which also will help you in your trading, finding good selling and buying opportunities in all different markets, whether they're Forex, futures, stocks, options, or what have you. Utilize the best buy and sell patterns used for over 400 years and give yourself a competitive trading edge against the markets. And with that being said, you all have a great day. Good luck with all your trading endeavors, and be careful out there with the markets. Always use stops, limit your risk, and keep your money management models tight, and also stick to a plan. Thank you very much.